Palantir, the name itself sparks intrigue. This data analytics giant has been making waves, disrupting industries left and right. But will they crack the code to Wall Street's most exclusive club? Will they join the S&P 500 elite? Right now, all eyes are on Palantir. Investors are on the edge of their seats watching every move the company makes. Will Palantir's performance be enough? Will they meet the strict criteria for S&P 500 inclusion? June 2024 is the month. That's when we'll have our answer. Will Palantir join the ranks of Apple, Amazon, and Google? Or will they remain on the outside looking in? This is more than just a game of metrics. It's about prestige, it's about validation, and it's about cementing Palantir's place in the future of finance. So buckle up, we're diving deep into the world of Palantir. Get ready for some serious market analysis. Let's see if they have what it takes to join the S&P 500. The S&P 500, it's the gold standard for investors, a benchmark of American business. But it's not just any old list of companies, it's a select group. Only the best of the best make the cut. Think of it like an exclusive club. There's a velvet rope, a tough bouncer guarding the entrance. Companies need to meet strict criteria. It's not enough to be big. You need a proven track record. The S&P 500 represents the top 500 companies in the US. These are the heavy hitters. These companies drive the American economy. They're the ones everyone is watching. So, what does it take to join this elite group? Let's break down the key requirements. These are the hurdles Palantir must clear. It's a challenging process, but the rewards are huge for companies who make it. First up, market capitalization. This is Wall Street jargon. It's a fancy way of saying company value. Think of it as the company's price tag. To join the S&P 500, a company needs to be worth at least $14.5 billion. That's right, billion with a B. It's a big number. It shows investors believe in the company's future. This is a major hurdle for many companies. It's a testament to their success. Only the biggest and most valuable companies make the cut. Now, how does Palantir measure up? They've been growing rapidly. Their valuation has been soaring. But do they meet the S&P 500's hefty requirement? Let's just say it's a close call. Size isn't everything. The S&P 500 also cares about liquidity. This means there are enough shares available to trade. Buyers and sellers need to easily find each other. Think of it like a busy market. You want lots of vendors and customers. This keeps prices stable and trading smooth. No one wants to wait forever to buy or sell. The S&P 500 wants companies with high trading volume. This ensures the index itself is liquid. It keeps the money moving. Palantir has seen increased trading activity. Investors are excited about their potential. But is it enough to meet the S&P 500 standards? We'll need to crunch the numbers to find out. Next, we have public float. This refers to the number of shares available to the public. It's the portion of the company owned by everyday investors like you and me. The S&P 500 wants companies with a significant public float. This ensures a diverse group of investors. It prevents any one entity from having too much control. A healthy public float is a sign of a mature company. It shows they're ready for the big leagues. Palantir went public relatively recently. Their public float is still growing. This is a key factor to watch. It could make or break their chances. Last but not least, profitability. The S&P 500 isn't interested in companies losing money. They want consistent earnings. They want to see a return on investment. This means Palantir needs to be in the black. They need to show they can generate profits. Investors want to see a history of financial success. Of course, growth is important too, but profits are the ultimate measure of a company's health. Palantir has been investing heavily in growth. They're expanding into new markets. But will their investments pay off? Can they convince the S&P 500 they have what it takes? All right, let's get down to brass tacks. We're about to dive into Palantir's financial statements. Don't worry, we'll keep it simple. No jargon, I promise. We want to see if they're making money, plain and simple. First, we look at revenue. That's the money Palantir brings in from its customers. It's the lifeblood of any company. Palantir's revenue has been growing steadily. They've been signing big contracts. Governments and corporations are lining up for their services. Next, we look at earnings. That's the profit Palantir makes after paying all its expenses. This is where things get interesting. Palantir has been investing heavily in growth. They're pouring money into research and development. They're expanding into new markets. This means their earnings haven't quite caught up to their revenue yet, but that's not uncommon for a company in a high-growth phase. Finally, we look at cash flow. This is the actual cash Palantir generates from its operations. It's a key indicator of financial health. Palantir has a strong cash position. They're not burning through money like some startups. This gives them a solid foundation for future growth. Now let's talk about Palantir's market capitalization. Remember, that's their price tag on Wall Street. It's calculated by multiplying the company's share price by the total number of shares outstanding. Palantir's valuation has been on a wild ride. It's been volatile, to say the least. At times, investors have been euphoric. They've bid up the stock price, pushing Palantir's valuation to dizzying heights. Other times, investors have been more cautious. They've pulled back, causing Palantir's valuation to dip. So where does Palantir's valuation stand today? It's still a moving target. But one thing's for sure, investors are intrigued. They see the potential in Palantir's technology. They believe in the company's long-term prospects. But the question remains, is Palantir's valuation justified? Only time will tell. Next up, liquidity. Remember, we want to see plenty of action in the stock. Buyers and sellers need to find each other easily. We don't want any bottlenecks. Palantir's trading volume has been increasing steadily since going public. More and more investors are taking notice. They're buying and selling shares, adding to the liquidity pool. This is a good sign. It shows there's healthy interest in Palantir stock. However, Palantir's trading volume still lags behind some of the giants in the S&P 500. Companies like Apple and Amazon see millions of shares changing hands every day. Palantir's not quite there yet, but as their profile grows, so too will their trading volume. It's just a matter of time. Now let's talk about public float. This one's important. We want to know how many shares are actually available to us, the public. The rest are held by insiders, employees, and early investors. Palantir's public float is relatively small compared to some of the established companies in the S&P 500. This is because Palantir went public relatively recently. They haven't issued as many shares to the public. A smaller public float can make the stock more volatile. It means there are fewer shares available for trading. This can lead to larger price swings. However, it also means that each share represents a larger ownership stake in the company. It's a trade-off. Finally, the million-dollar question: profitability. Can Palantir consistently turn a profit? That's what investors want to see. That's what the S&P 500 demands. Palantir has been on the cusp of profitability. They've had quarters where they've been in the black, but they haven't quite cracked the code to consistent earnings. Remember, they're still investing heavily in growth. They're playing the long game. The pressure is on for Palantir to prove they can be a profitable company. They need to show investors and the S&P 500 that their business model is sustainable. They need to start generating consistent earnings. Wall Street is buzzing. Analysts are crunching numbers. Everyone wants to know, will Palantir join the S&P 500? It's the talk of the town. Some experts are bullish. They point to Palantir's impressive revenue growth. They highlight the company's strong government contracts. They believe Palantir is on the fast track to S&P 500 inclusion. Other analysts are more cautious. They question Palantir's path to profitability. They worry about the company's reliance on government contracts. They wonder if Palantir can compete in the long run. It's a mixed bag of opinions, but that's Wall Street for you. Always full of speculation, always a gamble. But one thing's for sure, Palantir has everyone's attention. Remember, Palantir isn't the first tech darling to set its sights on the S&P 500. We've seen this story before. Companies like Google, Amazon, and Facebook all went through the same process. These tech giants faced scrutiny. Their financials were dissected, their business models were debated, but ultimately they proved their worth. They joined the S&P 500, and the rest, as they say, is history. Can Palantir follow in their footsteps? It's a tough act to follow. But Palantir has a few things going for it. They're operating in a rapidly growing market, they have cutting-edge technology, and they're led by a visionary CEO. We live in a data-driven world. Information is power, and Palantir sits on a goldmine of data. They help organizations make sense of it all. Governments use Palantir's software to track criminals. Corporations use it to optimize their operations. The applications are endless, and the demand for Palantir services is only growing. This puts Palantir in a prime position for future growth. They're riding a wave of data, and they're showing no signs of slowing down. This bodes well for their chances of joining the S&P 500. Palantir has made headlines for its government contracts. They work with intelligence agencies, defense departments, and law enforcement. These contracts are lucrative, but they're also controversial. Some investors see government contracts as a sign of stability. They provide a steady stream of revenue. They validate Palantir's technology. Others worry about the risks associated with government work. They fear political backlash. They're concerned about potential regulations. It's a double-edged sword. Government contracts can be both a blessing and a curse. The S&P 500 will have to weigh the pros and cons carefully. Palantir isn't the only player in the data analytics game. They face stiff competition from tech giants like Microsoft, Amazon, and Google. These companies have vast resources. They're investing heavily in data analytics. They're going after the same customers as Palantir. This competition could make it harder for Palantir to stand out. They need to differentiate themselves. They need to prove they have a superior offering. The S&P 500 will be watching closely to see how Palantir navigates this competitive landscape. As we delve deeper into Palantir's journey towards potential S&P 500 inclusion, it's crucial to understand the market dynamics that could serve as barriers. The tech sector, being highly volatile and competitive, poses significant challenges that Palantir must navigate. Market sentiment, economic shifts, and competition dynamics are pivotal factors that can have profound impacts on Palantir's eligibility and readiness for the S&P 500. Palantir operates in a sphere where technological advancements are rapid and consumer expectations are continually evolving. The company must not only keep up, but also stay ahead of trends to maintain its market relevance. This requires continuous innovation and adaptation, which, while necessary, can strain resources and impact financial performance in the short term. Additionally, the influence of external economic conditions cannot be underestimated. Factors such as interest rate changes, inflation, and geopolitical tensions can affect market performance globally. For a company like Palantir aiming for the stability required by the S&P 500, these factors introduce an element of unpredictability that must be skillfully managed. Lastly, competition in the tech industry is fierce. Palantir needs to clearly differentiate itself from other contenders not only in terms of technology and services, but also through strategic positioning. This involves not just excelling in what they do, but also communicating this effectively to the market and shareholders. Palantir's pursuit of a spot in the S&P 500 is heavily fortified by its technological prowess. The company stands out due to its advanced data analytics capabilities, which are crucial in an era where data is king. Palantir's platforms such as Gotham and Foundry provide integrated solutions that enable complex data operations, appealing strongly to government and enterprise-level clients. Innovation is at the heart of Palantir's strategy. The company invests significantly in research and development, focusing on artificial intelligence and machine learning to enhance its offerings. This not only improves their service quality, but also positions Palantir as a leader in the tech industry, aligning with the S&P 500's focus on companies that drive sectoral innovation. Furthermore, Palantir's ability to secure and handle sensitive information offers it a competitive edge. In today's world, where data breaches are common, Palantir's robust security protocols ensure client trust and loyalty, which are imperative for sustained growth and market capitalization, a key criterion for S&P 500 inclusion. However, technology alone does not guarantee success. The application of this technology in facilitating real-world solutions and generating measurable outcomes is what will ultimately influence Palantir's standing in the market and its appeal to the S&P 500 committee. Investor confidence plays a critical role in a company's journey towards joining the S&P 500. For Palantir, managing shareholder expectations is a delicate balance. The company must demonstrate consistent growth and profitability while also investing in long-term strategies that may not yield immediate financial returns. This dual expectation can create tension between short-term investors looking for quick profits and long-term stakeholders invested in Palantir's overarching vision. Communication is key. Palantir must effectively articulate its growth strategies, technological advancements, and market potential. Transparency in reporting financials, discussing challenges, and sharing future roadmaps can bolster investor trust and stabilize stock performance, an essential aspect for S&P 500 consideration. Moreover, Palantir's unique position in handling sensitive government and corporate data adds another layer to investor considerations. While lucrative, these contracts can be subject to public and political scrutiny, affecting stock volatility. Palantir must navigate these waters carefully, ensuring compliance and maintaining a strong ethical stance to reassure investors. Ultimately, fostering a robust investor relations program that not only addresses current shareholder concerns, but also attracts potential investors is crucial for Palantir. This will aid in enhancing its market cap and liquidity, aligning with the S&P 500's criteria. Entering the S&P 500 isn't solely a matter of financial and market performance. Regulatory compliance and ethical business practices are equally important. Palantir, operating in the high-stakes field of data analytics, faces significant scrutiny regarding data privacy and ethical use of information. Compliance with global data protection regulations, such as GDPR in Europe and CCPA in California, is imperative for maintaining operational legitimacy and market trust. Furthermore, Palantir's engagements with government and defense sectors place it under a heightened ethical microscope. The company must demonstrate that its operations align with not only legal standards, but also ethical expectations. This involves transparent reporting and accountability mechanisms that reassure stakeholders about the ethical stewardship of their data. Moreover, as a potential S&P 500 candidate, Palantir must exhibit exemplary corporate governance. This includes having a diverse and independent board, clear executive compensation policies, and effective internal controls. These factors not only affect regulatory compliance, but also influence investor perceptions and market confidence. Addressing these regulatory and ethical considerations is not just about avoiding penalties, but about fostering a corporate culture that prioritizes integrity and transparency. This can significantly enhance Palantir's reputation and strengthen its case for inclusion in the S&P 500. One of the strategic levers Palantir can pull to boost its eligibility for the S&P 500 is expanding its market reach through strategic partnerships. By collaborating with other leading companies and expanding into new industries, Palantir can diversify its revenue streams and reduce dependency on any single market sector. This not only stabilizes income, but also broadens the company's impact and visibility. Palantir's technology is highly adaptable, making it suitable for various applications from healthcare to financial services. Partnerships in these sectors could open new doors for growth and innovation, presenting Palantir as a versatile and indispensable player in the tech world. Moreover, expanding into emerging markets could offer new opportunities for growth. These regions offer untapped potential for data analytics services, and establishing a first-mover advantage could be beneficial. However, this requires careful navigation of different regulatory environments and cultural landscapes, which Palantir must manage efficiently. In conclusion, strategic partnerships and market expansion are not just growth tactics, but crucial strategies that can enhance Palantir's profile and attractiveness to the S&P 500 committee. By demonstrating growth potential and operational diversity, Palantir can solidify its standing as a leading global technology provider, paving the way for its inclusion in the prestigious index. Well, folks, we've journeyed through the intricacies of Palantir's business, dissected their financials, and weighed the opinions of Wall Street's finest. Now, the moment of truth has arrived. Will Palantir break into the prestigious S&P 500 club by June 2024? The anticipation is palpable. Investors are holding their breath, eagerly awaiting the verdict that could send ripples through the market. Inclusion in the S&P 500 would be a resounding endorsement of Palantir's growth trajectory and future potential. It would solidify their place among America's corporate giants. However, the decision rests in the hands of the S&P 500 Committee, a group known for its rigorous standards and meticulous analysis. They hold the keys to this exclusive club, and their judgment carries significant weight in the financial world. The stakes are high, and the tension is building. Let's delve into the final analysis to see if Palantir's qualifications align with the S&P 500's stringent requirements. As we stand on the precipice of the S&P 500 decision, it's crucial to remember that this isn't a simple yes or no scenario. The committee considers a multitude of factors, carefully weighing each one against their benchmarks. On one hand, Palantir boasts impressive revenue growth, driven by its cutting-edge data analytics technology and lucrative government contracts. They've carved a niche for themselves in a rapidly growing market, attracting attention from both investors and industry giants. On the other hand, concerns linger regarding Palantir's path to consistent profitability, the ethical implications of their government work, and the competitive landscape they operate in. These factors could give the S&P 500 committee pause, prompting them to seek further evidence of stability and long-term sustainability. The decision hinges on a delicate balance. Will Palantir's strengths outweigh the lingering doubts? The committee must determine if Palantir's current trajectory aligns with the S&P 500's vision of enduring value and market leadership. After carefully evaluating all the evidence, analyzing market trends, and considering expert opinions, it's time for my prediction. While Palantir has made remarkable strides, I believe it's unlikely they'll join the S&P 500 by June 2024. This prediction isn't a reflection of Palantir's potential, rather it's a recognition of the S&P 500's stringent criteria and their emphasis on consistent profitability and long-term stability. While Palantir's growth is undeniable, their path to consistent earnings remains a key question mark for the committee. Furthermore, the ethical considerations surrounding Palantir's government contracts could give the committee pause. The S&P 500 seeks companies with strong ESG, environmental, social, and governance profiles, and Palantir's involvement in potentially controversial projects might raise concerns. While June 2024 might be too soon for Palantir's S&P 500 debut, their future remains bright. As they continue to mature, demonstrate consistent profitability, and address ethical considerations, their chances of joining the index in the near future will undoubtedly increase. Regardless of the June 2024 outcome, Palantir's journey is far from over. The S&P 500 decision is a significant milestone, but it doesn't define their future success. Palantir remains a company with immense potential, operating in a rapidly growing market with cutting-edge technology. Their ability to attract top talent, secure high-profile contracts, and drive innovation positions them as a force to be reckoned with. The key for Palantir lies in continued growth, both in terms of financial performance and market diversification. Expanding into new sectors, forging strategic partnerships, and demonstrating consistent profitability will be crucial for solidifying their position as a market leader. Furthermore, addressing ethical concerns and proactively engaging with stakeholders on issues related to data privacy and responsible technology use will be paramount for building long-term trust and ensuring sustainable growth. Palantir's story is a captivating one, marked by innovation, controversy, and remarkable growth. Their journey towards potential S&P 500 inclusion is a testament to their ambition and the transformative power of data analytics in today's world. While their entry into this elite club might be a matter of when rather than if, the lessons learned along the way will undoubtedly shape their path forward. Palantir's ability to adapt, innovate, and navigate the complexities of the modern business landscape will determine their ultimate legacy. One thing is certain, Palantir has left its mark on the tech industry and beyond. Their story is a reminder that innovation often comes with challenges and that success requires a delicate balance of ambition, responsibility, and a commitment to creating lasting value.